Hey everyone, welcome back. If you're tracking what's shaking up markets, cash, and confidence in the US economy right now, you cannot ignore what just happened with the Department of Justice and the Federal Reserve. Today we're diving deep into the DOJ's criminal investigation into Fed Chair Jerome Powell, why it's sending shockwaves through financial markets, and how economists, business leaders, and political figures are reacting. Make sure you subscribe and hit that bell so you never miss updates like this, especially when markets move fast and money is on the line. In early January 2026, the U.S. Department of Justice served grand jury subpoenas on the Federal Reserve, an unprecedented legal action against the central bank's leadership. The subject? Powell's Senate testimony about a roughly $2.5 billion renovation project of Fed offices. Powell described this as a pressure tactic by political actors. Whether you're pro-Fed, pro-markets, or just pro-common sense, this is huge. Markets reacted instantly. Stock futures dipped. The US dollar weakened, and investors rushed towards safe havens like gold. The reaction from top economists and financial leaders has been explosive, and almost all of it centers on one big concern: Fed independence. A bipartisan group of economic heavyweights, including former Fed chairs like Greenspan, Bernanke, and Yellen, released a joint statement calling the DOJ's probe unprecedented and deeply troubling. They warned that undermining the Fed's autonomy could damage economic credibility and fuel uncertainty. Janet Yellen, Powell's predecessor and current Treasury Secretary, called the investigation extremely chilling and said it threatens the very essence of monetary independence. Harvard economist Jason Furman went further, saying this looks like an effort to use legal force to influence monetary policy, something typically seen in emerging markets, not the US. Even Lloyd Blankfein, former CEO of Goldman Sachs, called it like it is, saying it feels like an attempt at murder-suicide for the Fed's credibility. The political fallout has cut across party lines, which is rare. Republican Senator Thom Tillis openly stated he'll block any of Trump's Fed nominees until this legal cloud clears, a direct response to fears the administration is trying to pack the Fed with compliant voices. Senator Lisa Murkowski, also a Republican, said the investigation feels like coercion and called for Congress to investigate the DOJ instead. On the left, figures like Bernie Sanders blasted the probe as politically motivated persecution, and Elizabeth Warren accused the administration of trying to take over the central bank. You're seeing rare bipartisan concern about preserving the Fed's autonomy, a big deal in today's hyper-polarized environment. Investors are always on the lookout for stability. And right now, stability is in question. The US dollar slid, gold rallied to fresh highs, and stock futures signaled caution. When the head of the world's central bank is under criminal investigation, traders notice. Goldman Sachs' chief economist John Hatzius said the threat of a criminal probe only reinforces worries that the Fed's independence is under attack, though he also noted Powell would likely continue to base decisions on economic data. This matters because confidence is a core driver of markets. When players lose confidence in monetary stability, even the possibility of political interference, it can reshape expectations for interest rates, investment flows, and risk pricing. So let's break down what this means for the average person, investor, and saver. 1. Interest rates. If the Fed's independence is weakened, future rate decisions could become politically driven, not data-driven. That could lead to inflation, bubbles, or downturns. 2. Stocks and bonds. Uncertainty is a killer for markets. More headlines like this can increase volatility and shake investor confidence. 3. Everyday economy. Mortgage rates, loan costs, job markets, all are indirectly affected by how credible the central bank appears to be. The clash between legal institutions and financial policy isn't just headline noise. It's something that can have real consequences for your wallet. Here's what we're watching next: how the Senate Banking Committee responds as Powell's term nears its end in May. Whether gridlock over Fed nominees causes longer-term stagnation in policy leadership. Market reactions if this turns into a prolonged political battle or a legal precedent. One thing is clear, this isn't just a story about Powell or one renovation project. It's a litmus test for how political pressure intersects with economic policy in the world's largest economy. If you want real-time analysis on market-moving stories like this, plus breakdowns of what it means for your money, hit that subscribe button and ring the bell. Drop a comment below with what you think. Is this a danger to Fed independence, or just politics as usual? Thanks for watching. I'll see you in the next update.